So you've interviewed people like Boris Johnson and Leonardo DiCaprio. Tell me a bit more about that. I mean, that's just straight out interesting. How did you get into journalism?
People never ask me that question, weirdly, so this might be the first time I've said it on camera. I got into journalism kind of by mistake, worked my way up and eventually got to the BBC and to ITN, and ended up sort of some years later, as you say, interviewing a number of British Prime Ministers and also sort of Hollywood celebrities. So it was quite a fun job. Gets thrown to the side. You don't worry about what's going to happen in the future. You don't worry about what happened in the past. All you need to know is, in this moment of now, the market's going up and you buy. If it's not a very successful trade, then days or indeed minutes. If it's that bad, I'm out very, very quickly because, as I say, you've got to take those small losses. I had to satisfy myself that I was good enough at trading consistently to make a living at it.
Okay, welcome to another interview on The Trading Battle. I'm your host, Steve Ruffley. Today we've got Glen Goodman, who's a trader with 25 years under his belt and the author of the best-selling book, The Crypto Trader, which is now in its second edition. He was previously a TV business correspondent for the BBC News and ITV, interviewing leading politicians such as Boris Johnson, David Cameron, Theresa May, and Hollywood A-listers like Leonardo DiCaprio. Glen famously turned £3,000 into £100,000 by anticipating the 2008 financial crash, an experience he wrote about in the Times. He quit his job and his studies to focus on trading and quickly found that his strategy worked better in the newly emerging Bitcoin and crypto markets. His strategy involves profiting from each major bull run while avoiding the ruinous crypto crashes. Glen, welcome. How are you doing?
I'm good. How are you?
I'm good, mate. Thanks very much. Now, listen, I usually open with the same question about trading, but I'm going to go straight into this interviews. So you've interviewed people like Boris Johnson and Leonardo DiCaprio. Tell me a bit more about that. I mean, that's just straight out interesting. That is interesting to me. How did that come about? How did you get into journalism?
I got into journalism kind of by mistake, in a way. I was. People never ask me that question, weirdly. So this might be the first time I've said it on camera. But basically, I was at university and I was in a pub, and I was a bit drunk. And this bloke who had left the university the year before was also a bit drunk, and he was kind of showing off because he worked at this big flashy radio station. There was a big deal in that area, and he went, "Oh, you got a good voice." You, I don't know why he thought that, but he was like, "You got a good voice for radio. You should be on radio. I work for them. We need a newsreader. You should come and read the news." And so I kind of thought it was a joke, but he followed up on it. I went for an audition, got the job as a newsreader, and it kind of went from there. So I was a sort of very, very minor celebrity while I was still at university. And then I carried on after I left, worked my way up, and eventually got to the BBC and to ITN, and ended up sort of some years later, as you say, interviewing a number of British Prime Ministers and also sort of Hollywood celebrities. So it was quite a fun job and quite varied. You mentioned Boris Johnson in particular, and I do like to kind of point out to anybody, wherever possible, that I saw that he was bad news before anyone else, right? Seriously, I had to interview him so many times because not just when he was Prime Minister, but previously when he was Mayor of London. That's when in fact, I didn't interview him when he was Prime Minister, Boris Johnson. The other two, yes, I interviewed them when they were Prime Minister, but Boris Johnson, I'd already left journalism way before that. But while he was Mayor of London, I was interviewing him all the time. And the problem was, I noticed that even though he was great fun, and he was, he's really likable in real life, just like you'd expect, just like the guy that you see on the TV. So people would kind of be pleased by that when they walk into a room and go, "Oh, wow, he's just as kind of down to earth as he is on TV." But here's the thing, after interviewing him lots and lots of times, you start to realize that he didn't know anything about anything. That's how it
Really?
seemed to me. It didn't matter what the subject was. Whatever I asked him about, he just hadn't read up on it. So I always knew more about the subject in hand, even though he was the mayor and he was supposed to know everything about it. Usually it wasn't catching him on the hop. It was like the mayor announces his new initiative. And so I'd go there to interview him about his new initiative. And it would turn out that he didn't know very much at all about his new initiative. He'd just been handed a piece of paper by, one of his servants. And they were just like, oh, he's like, oh, what's this? Yes. And then he'd give me some guff about, it's a wonderful, wonderful thing we're announcing today. It's going to transform all sorts of things across London. Wonderful for the people. So I kind of knew he was going to be a terrible prime minister one day. Already people were talking about him as prime minister. And I would tell everybody who would listen, including everybody at ITN, we've got to stop him. He mustn't be prime minister. He'll be terrible. But obviously, I wasn't a big enough deal to actually have any impact in that regard, sadly.
Wow. I mean, that's interesting. So, I mean, if we translate that, I guess, into trading terms, this is interesting. So, well, famously, you did this £3,000 into £100,000, anticipating the financial crash. So, was that again from a background of your fundamental analysis, your views on the market? What led you from the journalism into that trade? Was that something you prepared for, or was that just again an anticipation for what you saw coming?
Yeah, that was something I was preparing for quite some
Hmm.
time. And yeah, my job did play into it in a fairly big way. Not that I had any kind of inside information, sadly.
Unlike
Though
unlike Boris.
yeah, exactly. Though having said that, if I had any inside information, I wouldn't have been able to use it legally anyway. So it's probably best I didn't. But the way it worked was that in the years leading up to the 2008 crash, there were signs, and they were very, very big signs that actually anybody could see. You didn't need to be a business correspondent working for a news broadcaster to see that the bank Northern Rock collapsed in a blaze of kind of panic in 2007, right? You may remember, Steve, I think you were still even in England at the time, were you?
Was, yeah.
Yeah, so you'll remember, all those queues outside Northern Rock branches, everybody trying to get their money out, and they couldn't get their money out because basically this great British institution was going belly up. Now, that happened in 2007. But then what happened to the markets? Do you remember after the Northern Rock crash? And obviously similar things were happening in the United States, not quite on that scale, perhaps, in terms of the impact on just ordinary people, but certainly the subprime mortgage debacle was starting to become considered a big deal in the States. So, there were big signs that things were going wrong, and yet the markets just continued to climb. Throughout the rest of 2007, they just carried on going up and up. I'd been trading for some years already in my spare time before that. My interest in trading had obviously been kind of sparked off by being a business correspondent and, because I was just involved with money things and company things every day, day in, day out. So it was natural that I'd become more and more interested in it. And, I was trying all the different trading methods over those years. Later on, if you like, we can get into, in fact, we will, because I've got to tell you later on about sort of my big epiphany moment in the very early days of my trading where I screwed up really badly, and we've all got one of those stories, I guess, where you lose nearly everything, and But anyway, that's something else. At this point in time, I'd already been trading several years, so I was starting to become sort of savvy-ish, and the Northern Rock thing happened and the stuff in America, and yet the markets were still going up and up. And obviously I was thinking to myself, this seems wrong, because these subprime problems are not going away, however much all the bank bosses in America insist and swear blind that actually it's not that big of a problem. I knew enough to know that it really was that big, or it was a pretty big problem at the very least. And so it seemed strange. So what I was looking out for was an opportunity to go short. I used spread betting platforms, which we have here in the UK, which make it quite easy to go short. There for people outside the UK, they're sort of similar to contracts for difference, CFDs, where you can go long or short, betting on the markets going in either direction. but spread betting's better because it's because the profits are tax free. Yay! We have that in the UK. But so markets, it carried on going up and up and up, and then there was a point where it started sort of turning over towards the end of 2007, and I wasn't ready to short then because I'd learned enough by that point to know that you got to choose the perfect moment. You've got to have the right moment if you're going to enter a short, partly because shorts can be so incredibly volatile, and also because if you pick the right moment, you can get in there right for a collapse. And that's always wonderful. Now, I didn't time it perfectly, as it turned out. And, that article that you mentioned that I wrote for the Times as a sort of full-page feature some years later was called The Little Short, because what I did was like that film, The Big Short, or the book, Michael Lewis's book that was turned into a film, starring Brad Pitt and so on. But they did, a short that was worth billions, whereas I did a little baby one because I didn't have much money at that time. Reporters, believe it or not, despite the fact they look smart and wear suits, they don't actually earn that much money unless they're right at the top of the food chain. They don't earn much money at all, in fact. So I didn't have much in the way of savings, but I was willing to bet them on this. I went short. You'll see in the article that I got the timing slightly wrong, but I didn't lose my entire stake, and I was still kind of in, and I was waiting for the big flush moment where everybody would just suddenly realize the truth that everything was going horribly wrong in the world. I put shorts on the S&P 500 and a few other things, and also banks, of course. I've been shorting British banks. And there was a moment basically where Bradford and Bingley went bust. And I think that was the moment where I got that whoosh downwards. And that's when I started making serious money out of it. And then it just carried on. I mean, the summer was great for me, not so great for the global economy. But then there was Lehman Brothers, of course, which made the collapse even worse. One last thing I want to point out to anybody who thinks about trying to copy that I did. Those moments don't come along very often. Obviously, there was, only one great financial crash in 2008, and there hasn't been anything on that scale since, apart from, I suppose you could argue, maybe the COVID crash, but that was pretty short-lived by comparison. So what I would say to people is, you have to pick your moments with that kind of thing very, very carefully. You can't expect it to happen more than once in a blue moon. But also, if you're going to short banks or even short anything during a crash, you do want to get in there earlier rather than later. And when I say that, I don't mean like selling on the way up. As I say, I was very anxious to make sure the market had already kind of, started rolling over before I actually put on my shorts, because the last thing you want to do is short a market that's still rising. You will lose your stake if you're trading on leverage, which people, they borrow in order to short. You can lose your stake very quickly. So what I'm trying to say is you don't want to do it too early and you don't want to do it too late, which is pretty obvious, but you really got to concentrate on that timing. So you don't want to be too late. You don't want to be too early because you'll lose money as the market's still rising. You don't want to be too late because what the British government did was try and ban shorting. In fact, they did ban shorting at that time. And the first thing they banned was shorting bank stocks, because what they do when everything's going to hell is they reach out for a scapegoat. And as Steve, obviously, you know a lot about how they like to do that with us traders. They like to blame nasty traders, particularly people who short, because you're a baddie and you're trying to make the shares go down. Say that again.
Yep, you're the bad guy, mate. Yeah, absolutely. That's how traders are portrayed, for sure.
Exactly. And so, particularly people who were shorting the banking shares like me, because we were making the banks go bust, according to the government, if I remember correctly at the time, which is absolute nonsense, obviously, because the banks were insolvent. The only reason their share prices hadn't already gone to zero, some of them, was because people weren't quite aware of how bad the problems were. So actually, the prices should have been even lower, really. But anyway, they blame the shorters, and so they banned shorting. But luckily, I'd already opened my shorts and they didn't force me to close them by law. So I was able to carry on making money, but the gate had shut for anybody else who wanted to short banking shares. Also, it's worth noting that after they banned shorting banking shares, it made no difference whatsoever to the decline in banking shares. It just continued regardless. So yeah, that was a real sort of career-defining moment for me, was when I called all of that right. When I said that it helped that I was a business reporter, the only thing that was really a sort of really solid reason that a solid way in which it helped me was that I was interviewing a lot of bank bosses in late 2007, early 2008. The heads of some of Britain's biggest banks. And even though they just kept telling me, everything's fine, yes, we're recovering from all our problems, we don't foresee any problems this year, it was their body language off camera that bothered me, because I noticed it with several of them. They would just, they would be relaxed on camera and then tense up off camera, which is kind of the opposite of the way it usually happens. So it made me think, these guys, they're not on a level, they're hiding something. So it was just a kind of, it was a hunch, I suppose, just based on their body language. That was the way in which my job helped me, I guess.
Yeah, I mean that's really interesting, because I mean that's an insight that a lot of people won't ever get. To actually meet people that run banks, as you say, face to face, and judge the on off screen. Yeah, that's really interesting. I guess this question's kind of twofold now. So in my experience, of dealing with professional traders and traders who have made it,
Mm.
every trader that has made it has a big win story. So you have yours. So I guess the first part of the question is, how did that change you after that trade? Did it kind of make you more confident, overconfident? What's that? And then as we're talking about, getting it right and calling it right, what's the temptation then to keep wanting to go big? Because that's another thing I've experienced with people that have made it big. The next trade has to be big because they're looking for that same kind of return. What's your experience on that?
I mean, there was certainly quite a lot of temptation, as you say, to get big for my boots and to go big and all that kind of thing. Luckily for me, I already had, as I said, several years of ups and downs and learning and trying all different trading techniques and reading a million books and articles, and I'd been through that whole thing over the previous sort of 8 years or so. I'd started trading during the dot-com boom and crash, and that's the sob story I'll probably tell you later on.
Yeah,
But that's what's kind of set me on my trail. So I was already, fairly wise about trading, luckily, when I had my first big win
yeah,
in 2008. So, yes, I did start trading a bit larger, and that worked out well for me sometimes and not quite so well for me at other times. And I started learning more about risk management as a result. But luckily, I already knew a fair amount about risk management and was aware of how important it is to keep your positions at a reasonable size, not too big, not too small, sort of Goldilocks size positions. Partly because I had a mentor, not exactly a personal mentor, but you probably heard of Ed Seykota, I
yes,
guess. Steve, yeah. So he was one of the original market wizards in the original
right,
book.
yeah,
And I'd read that book and I was incredibly impressed by him and his trend following style. But like many people, not even so much by his trend following style, but by his wisdom about trading in general. He is a very, very wise man. So I sought him out on the internet, and he had this brilliant FAQs thing, as he called it. It's basically just his website, edseykota.com. It still exists, but we haven't seen hide nor hair of him for a couple of years now. I honestly don't know what the situation is with him at the moment, but back then he was very active. And what you could do is you would write him emails and write him an email asking a question, and then he would publish your email with your name redacted. So it would be like an anonymous email, and then he'd give it a full reply. Like, he just did this for everybody, because I guess there was just about a manageable number of people, maybe a few dozen of us there, like talking to this legend. So that's why I kind of saw him as a personal mentor, because he was answering my personal questions on a regular basis. And he taught me, amongst other things, about risk management. and about stop losses and all these desperately important things. Had I not known those things in 2008, I'm sure I would have lost everything, all my winnings. So yeah, that was great to have that. And going forward, what happened then, I'm sort of jumping ahead slightly, but the time that I decided it was time to leave broadcasting was a few years later, because as I say, I had enough wisdom by that point to know that a one-off sort of black swan win like that was not going to keep me and my wife and my baby kids satisfied for the rest of our lives. So I had to satisfy myself that I was good enough at trading consistently to make a living at it. So I decided to carry on being a TV reporter for several years after that, until I was absolutely sure that I could do this year after year after year and still make money at it. And there's a small story attached to that, which is, it was 2009, the year after the big crash, where I had this epiphany, because you may remember, do you remember Occupy Wall Street and all that
Yep.
came up, all these angry people who were angry about the great financial crash and how the banks had been bailed out, which it was totally unfair because
Yep.
taxpayers are paying for bankers' bonuses. It really was disgusting and disgraceful. So people were very angry, and there were these big riots in the Square Mile in London. And I was outside the Royal Bank of Scotland building, and people were smashing the windows. You know, it was a bit like Antifa now. They had the masks on and everything, and big sledgehammers, and they were smashing the windows. And my camera woman was like, Glenn, get in front of the camera. Come on, let's do a piece to camera where you explain, like, behind me here is a man smashing the window of the Royal Bank of Scotland. These are incredible scenes, or whatever, the kind of stuff that reporters say. But when she tried to get my attention, I wasn't listening because I was on my BlackBerry. I was still had a BlackBerry at that time, and I was just desperately trading, because the riots themselves were causing the markets to go crazy, and it was affecting all kinds of all my positions. And I at that moment, I kind of realized what I'm doing on this BlackBerry feels much more important to me than getting the scoop. And so that was when I kind of realized I can't do both because it's not fair on my employer apart from anything else. So it was still a couple of years, 2 or 3 years before I actually, it was 2012. So it was a few years before I actually really got the guts to decide, okay, you're doing consistently well enough, let's leave the job. But that 2009 moment kind of sealed the deal for me, I guess.
Oh, it's really interesting. I mean, it is, isn't it? We all have that epiphany moment where, you have to jump in with 2 feet, and, it does become your life because it's your livelihood. So, yeah, I mean, we've all actually, as traders, we've all been there. So, I mean, talk a bit more about your trading strategy then. So, you class yourself as a trend follower. So, obviously, I
Yeah.
mean, I guess people will be able to read this in your book, The Crypto Trader. I mean, but just go through kind of basics of, your trading strategy, what, might kind of help listeners, help people if they're, on their varying parts of their journey, kind of what worked for you and what were the kind of standout points of the strategy that gave you the confidence to say, right, I'm going to be a trader and this is how I'm going to do it.
Trend following was something I learned about from Ed Seykota. I'd already tried out various methods over the years, all the usual stuff. I'd tried pretending to be Warren Buffett, which, like most people find out, never works out for us ordinary people. Trading on fundamentals and, right, I'm just going to buy whatever has the lowest price earnings ratio, simple stuff like that. Value investing, which has been out of fashion for quite a while now. And I tried lots of other techniques, but trend following really captured my imagination because Ed was insistent that it was a kind of almost a religious experience, because in order to be a really, really good trend follower, you have to kind of take a bit of an Eastern religion view on life, because you have to forget about the past and forget about the future. And as Ed put it, trade in the moment of now. Which sounds really mystical, but it does really make sense from a financial point of view. You have to be in the moment, not worry about sort of all the stuff that's happening around you and all the news. And I knew from my job as a business correspondent that most of the financial news is a load of nonsense anyway, because I was the one purveying that nonsense into people's ears. Seriously, I mean, obviously there are big stories from time to time, and those are worth reporting. But a lot of the time, the day-to-day bread and butter stuff for a business reporter, there's actually not much going on, if anything, in the market. And so your boss would kind of say to you, like, "Oh, the Bank of England has kept interest rates on hold again today. Um, what's the angle here?" And I'd go, "Well, there isn't really an angle." Yeah, I go, "Well, there isn't an angle because everybody was expecting them to keep the rates on hold. Everybody knew they were going to, and they did." And you go, "Well, like, what's the market doing?" And I'd go, "Well, the market's down like 10 points, which is just a rounding error. It's nothing. It's not a story, mate." And my boss would go, "Well, it is a story because we need a story. There is news time to be filled. There's a program, it's of a certain length, and it has to have a certain amount of news in it. So write the news and then report it, say it to the camera." So, I'd end up having to go on air saying things like, "The Bank of England kept interest rates on hold today, which was expected by some analysts, but other analysts said that it took certain parts of the market by surprise. So it plunged by 10 points." It's that kind of thing. And it's such meaningless nonsense. So that was kind of part of why trend following appealed to me, because it's all about literally seeing a trend in the market, buying into the trend, following the trend, and then when the trend starts to bend, you sell. It's like an amazingly simple concept, and it just kind of, it's like all the clutter gets thrown to the sides. You don't worry about what's going to happen in the future. You don't worry about what happened in the past. All you need to know is, in this moment of now, the market's going up, and you buy. And I don't know. It's kind of beautiful when you put it like that. Once you start getting into the nitty gritty, obviously it gets more difficult, it gets more complicated, and you start trying to optimize your system of trading and all the rest of it. But the sort of the pure basic idea is very beautiful. I'll tell you about a few of those complications because I think they're worth mentioning. It's to the human brain, trend following doesn't come that naturally because, first of all, you're not getting a bargain. You're not buying right at the bottom. You're always waiting for a market to turn before you buy. And likewise, actually, that short sell in 2008 was a great example of trend following because I waited for the market to turn. So it's like market goes up, market tops out, market starts going down. Here's the new trend. It's starting to go down. Sell. Down, 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 down. And that's how it works when it works. Obviously, a lot of the time it doesn't work out as beautifully as that. So that's what stop losses are for. And as a trend follower, you have to put up with a lot of frustration. This is also where the kind of Eastern kind of Zen comes into play, because you have to put up with so many tiny losses as a trend follower. As say you're buying into a new trend and you're like, right, I'm buying and I'm hoping it's going to go up and up and up, but it doesn't. Oh, I'm sold out. Okay, I've got a small loss. Oh, here's another trend, up it goes. I'm buying. This is a good one. Another small loss. Peter Brandt, the guy, he's big on Twitter or X. Yeah, I know him sort of reasonably well now, and he's an amazing guy. He's an amazing trader. He's not a trend follower. He considers himself a swing trader, but what he does have in common with me is buying breakouts and basically sort of running them up to a point, and then he'll usually take some profits, but then he usually lets the rest of a position run for quite some time longer. So he is actually pretty close to being a trend follower, in my estimation. I'm sure he'd disagree. But what's interesting about him is that he says he's big. He's hugely successful. He makes great percentage returns year after year, decade after decade. But what he says is that, he takes tons of losses and he tends to report them in real time, particularly to his sort of close followers like myself, who he might talk to privately. But even on his public Twitter, he will, talk about some of his buys and sells, and he takes long strings of losses in a row. 12 losses in a row, 15 losses in a row, and it's hard even at his age, in his late 70s. But he is obviously so used to it now that the sting isn't what it would be for a 25-year-old who's just starting out in trading. And if they've decided to become a trend follower and they suddenly get 25, or not 25, say 15 losses in a row, they're going to think, I'm doing this wrong, I'm useless at this. But that's not necessarily the case. It's just that if you were to toss a coin 15 times, occasionally you're going to get 15 heads. It doesn't happen often, but it does happen.
Can happen, yeah, absolutely, absolutely. Yeah,
So
that's interesting.
yeah, that's the big challenge with trend following, I guess. That's probably the biggest challenge. But obviously, then you get a few big wins that cancel out all those losses. That's the idea, and it does actually work in practice if you're doing it properly.
So obviously, when we talk about trading, from my days on the kind of floors, etc., trading was always intraday, so very small periods of time. Some of my trades still are minutes and hours. So
Yeah.
how does time affect your trading? I mean, it's trading, but it almost sounds like it's more creeping into that short-term investing almost. I mean, what distinction do you make between investing and trading, and how does time affect your trading? When you talk about following the trend, how long is that?
For me, usually a trade will last weeks. If it's not a very successful trade, then days, or indeed minutes. If it's if it's that bad, I'm out very very quickly, because, as I say, you've got to take those small losses as a trend follower. You must never hold on for a big loss. I'd say actually that's my main general rule for trading for almost any strategy, is just don't allow yourself big losses, cut your losses. But particularly when you're a trend follower, it's very important to keep all those losses small, because otherwise, obviously, the few big wins aren't going to outweigh the little losses. Sorry, remind me, what were you driving at with
It
that
was really the
question?
kind of the time element, really. Just
Oh yeah,
the kind of like when you talk about traders. I'm just not talking for our listeners, and people that are going to be watching this.
mm,
Original traders, guys on the floor, the pit, phones, quick, 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 buy, buy, sell. So obviously, trend following it has to take time. So it's
yeah.
kind of how you switch more from trading as a kind of entry style to a more investment or short-term investment, trend following, an exit style. So just a personal interest. How does time affect your trades? How conscious are you of time?
Time slows down as a trend follower, because, as I say, weeks is typical for me for a trade. But if it's a really successful trade, it can last for months, and I've even followed trends for years and years in a few cases, when the trend just refuses to end. There are no massive corrections at any point. It does happen. And so um, and so yeah, as a trend follower, you tend to take a sort of a longer term view, but it doesn't have to be a super long term view. Like I say, you can trend follow sort of shorter term trends that last just days or weeks. Day trading, I feel, for many reasons, is best left to either the banks, or, well, actually just probably the banks, the hedge funds, the specialist outfits, the ones who've got those expensive wires that cost millions of dollars that they put through a mountain in order to shave a millisecond off the time it takes their orders to reach the exchange, that kind of thing. You can't compete with those kind of people. Day trading is not really, well, I mean, the figures show it, and so many studies have been done on this, obviously, that something like 98% of day traders fail. Other times people say 90%, or even I've seen as low as 85% of day traders fail. So, but that's about as low as it gets. So really, it's a very difficult game to succeed in. And there are lots of reasons for that. And I could spend all day just listing the reasons and explaining why each of those reasons is yet another reason why day traders fail. But I think one key one is that you don't have time to think properly. And as a trend follower, you can scratch your chin and when should I get out of this trade? Well, I've got my stop loss here, but should I raise my stop loss a bit? You can spend a whole day just thinking about that if you like, if you want to indulge yourself in whether you should move a stop loss. Whereas if you're a day trader, you things happen, you panic, you make mistakes. It's humans are a distinct disadvantage to any kind of AI, it seems to me, with that kind of activity, because it's also like quick, make a decision, make a decision. So obviously I've played with day trading in the past, but luckily just played. It's never kind of ruined my life like it has so many people. But yeah, I stick to the longer trends. And what's more, it's much more conducive to a nice life. And that was kind of my main goal, obviously, when I left TV reporting. I said to you off camera how much I hate getting up early, and that was one of my main goals in life when I gave up the journalism, was no more getting up early. And I've kind of stuck to that pretty religiously ever since. As you know now, because you've had to get up early in order to interview me later in the later in the
Absolutely,
day.
mate. Yeah. Yeah, no,
I mean,
time is a massive thing. I've interviewed a lot of people, well, not as many as you, but quite a few, and I've got a few characters, should I say, people I've met, and all of them, have made, tens and sometimes hundreds of millions. And the one resounding fact, now they're all in the 70s, is like they wish they had more time to spend with the kids. And it's that time, money, opportunity thing, isn't it? You
yeah,
can't have them all equal. Something's got to give, and that time thing you can't get back. And that's certainly one thing. Yeah, early in my career, when I was commuting into the city, I'm like, got to be a better way to do this. There's got to be a better way. I can't be giving so much time just being in office. I need to get my time back. That was my early motivation to do what I did. Was to kind of be master of my own destiny and have my own time. And
yeah.
so
Well,
like
what you
yourself,
just
for
said
the last
makes me
15, 20 years, I've been doing that.
Yeah, and what you've just said makes me feel actually a hell of a lot better. Because first of all, you said some of these guys have made hundreds of millions, and it makes me think, oh, shouldn't I try and make hundreds of millions? But here's the thing, I'm having a nice life. I don't feel the urge to really pull my finger out and make hundreds of millions. But what I have been able to do is watch my kids grow up, you know, for years and years now. I've watched them. I've watched them grow. God bless them. And like you say, I guess a lot of those old, you know, almost billionaires who you've interviewed would perhaps, I like to think, be a bit jealous of me that I've got that I may have less money than them, but I've had a better life, at least in that respect. And like you, Steve, you've organize your life now so that you get to watch your kids grow up, which is, like you say, you can't get that time back. And I was aware of that because my kids were extremely young at the time that I decided to give up my full-time job, and I just didn't feel like I was seeing enough of them. You know the score. You come home at the time that they're going to bed, and you might get to kiss them goodnight if you're lucky, if your boss hasn't kept you late, and then you probably don't see them in the morning, maybe very, very briefly. I mean, it's just, yeah, it's been a really good way of doing things, actually, and I should probably be more grateful for the past decade or so of my life and how it's gone. But like most people, I just bitch and moan most of the time.
The way I look at it is I'm the same. I reached the level and the commitment and what you'd have to go through to get to that next level. I just wasn't prepared to do. So I look at it as like hashtag time billionaire. You know what I mean? It's like I'm not a billionaire, but I have plenty of time, and I'm fine with that. There's more to life than money. But obviously, again, like most things I've said, it's easy to say that when you've done okay. So it all
Yeah.
depends where you are in your journey, doesn't it?
Well, I mean, to be honest, I've never been the kind of person that lusted after the sort of bling lifestyle. If I was that kind of person, maybe I would have tried day trading more seriously, for example, even though the odds are so strongly against you. Obviously it's like a bit of like a lottery ticket, that kind of trading, I suppose. And indeed, crypto trading, which is what I specialize in now, hence the book, The Crypto Trader, is obviously a lot of people are attracted to crypto trading for that very reason, because you can buy these tiny little minnows and then it might turn into a giant trade that makes you an absolute fortune, even though you only put, £10 into it or $10 or whatever. But the problem is I've seen it all. I've seen it all, mate, because since the first edition of my book came out in 2019, so many people have written to me, and I've forged little, online relationships with so many different people, and I've heard every sob story under the sun about crypto. And for every one person who makes it big and makes, millions, there's 1,000 others who end up stacking shelves in Tesco because they went for those big wins. They didn't manage their risk. They didn't look at their position sizing really carefully, boring stuff like that. They didn't stop their losses. They didn't cut their losses, crucially. I mean, there's this one guy in particular who was, I like to think, a good friend of mine. And that went south for a number of reasons. But one of them was that he was kind of my number one disciple. He'd read my book and he just got it so well, and he understood exactly what to do. And he was so good at executing his trades. And he started increasing his risk to levels that I considered a bit racy, and I did warn him of this numerous times, but he kept at it, and he kept pushing it further and further, and he was making money very quickly, much more quickly than my book would have recommended. But the problem is with people who do that is that they almost never know when to stop, when to switch it off. Yeah, you've come across that over and over again, I'm sure, Steve. It's like, if you could take a human being and say to them, I want you to turn this $10,000 into $1 million, and I'm going to show you how you can do it relatively quickly, but then I want you to stop and never do another trade in your life. Yeah, if you could make that happen, then maybe that would be worthwhile. But the reality is, in real life, nobody ever stops at that million. And this guy didn't stop at $1 million. He turned $30,000 into $1 million. And he was just an ordinary guy. That's all he had, was 30,000. He had a family to support. Turned it into $1 million. But, he kept sizing up his risk. His bets were getting too big, which is how he managed to turn it into $1 million. But then bets got even bigger, and then the market turned down, and he didn't sort of notice when it turned down, which is always the way, because he's starting to think he's God and that he's better than the markets, and he can almost will them to do what he wants. And he lost it all, is the short end to the story. Sadly, he stopped following the rules in my book, stopped following any rules as far as I can make out, and got himself all the way back down to about 30,000, where he managed. It's funny how that often happens. It's like, once they get back to their initial stake, they stop. So they still got that little bit left a lot of the time. And that's how he ended up. And it really messed with his mind, apart from anything else. It messed with his finances, but it's not like he can go, oh, well, that was a crazy time in my life, but now it's over and I'll just move on. No, it psychologically scars you, that kind of experience. And I really felt that was the case with him, to be honest.
Yeah, I mean, we've heard that kind of story a million times. I mean, obviously the book's called The Crypto Trader. So, what kind of drew you into that? I mean, obviously, it's something I personally have never traded. I have my own opinions on Bitcoin, but obviously not my interview. So what was your turning point of going into crypto? Are you still the crypto trader? Is that still primarily your source of income? Talk about that.
Yeah, I'm still him. But I trade everything. I trade stocks still. I trade commodities still. I trade treasuries. Forex even sometimes, though not so much. And I don't trade Forex like other people do. Everyone else seems to trade Forex, in, out. It tends to be a day trader's activity. But when I trade Forex, I'm like buying the pound and then holding it for 3 months and then selling it again. Or, those really long trends. And they are in all markets. They're in Forex as much as they are in any other market. Crypto I got interested in, obviously, like everybody else, when I heard about Bitcoin. So that would be over a decade ago now. I first traded Bitcoin just as a spread bet. And, I didn't think much of it. I learned about the technology and I understood it. And I was already aware of the concept of digital currencies that had gone back, several decades, back to the 90s. People were experimenting, trying to make those kind of things. This was the first kind of really solid attempt that was successful, was Bitcoin. So I was impressed by it. But at that point in time, more than a decade ago, frankly, anybody who told you Bitcoin was going to become the biggest thing ever, it kind of sounded very much like they were trying to sell you a handful of magic beans,
Sure.
because it was like, but nobody even knows about this thing. Nobody cares about this thing. And it's just like, there are lots of different ways to transact money across borders. Even back then there were. I mean, now there are even more ways. You go to almost any country in Africa and they don't need to use cryptocurrencies in order to transact across many borders. And certainly when they're doing peer-to-peer transactions within the countries themselves, they've got various apps now that allow them to very easily transfer money from one mobile phone to another. It's kind of how it's done without involving any cryptocurrency. But anyway, as I say, back then it was thought maybe people in developing countries would use it for peer-to-peer transactions on a regular basis, just to do their shopping or whatever. Nobody was quite sure what it was for. And so I thought it was really interesting, but it wasn't for me a buy and hold thing at that point in time, because I wasn't one of the very few religious devotees. And you'll have come across these in the world of crypto. I'm sure
Yep.
these people who, they just treat Bitcoin like a religion and they absolutely believe that one day it will rule us all and the world will be as one.
Yes.
And I still kind of think that that's a bit weird. And, and it's highly unlikely that their vision will become reality. But there are many ways now that Bitcoin is a huge deal and that
Yep.
so many people own it. There are many ways in which it can be a useful thing in the future, and perhaps even a kind of, well, people talk about digital gold. I think it already is that now. It's become a store of value to some degree. And indeed, it may become more important as a currency if the worst comes to the worst and the dollar starts plummeting because it's being printed far too much in the coming years. We all know that there's a damn good chance that there'll be some kind of financial reset in the next 10, 20 years, because frankly, the whole debt cycle has got out of control once again, like it does every, this is Ray Dalio's big thing, isn't it? That every 100 or every 80 years or so, we have to have a big debt reset because all the debts in the economy get too large, and there's usually a sort of change of the currency guard at that
Yep.
time. It's possible, it is still possible, that Bitcoin could become the dominant global reserve currency at that point in time. I am skeptical that major governments will allow that to happen unless they are somehow in control of Bitcoin, and they can't really be, because that's the whole idea, is it's a
Well,
decentralized.
exactly. Yeah, exactly. I mean, that is yeah, that's such a wormhole, because when the Bitcoin kind of hodl crew, Maxi, tell me about the way they see it going, it's like,
Yeah.
well, who's Satoshi? Who is this guy? Is it secretly the NSA? I don't know. I mean, like, I don't put my tinfoil hat on, but I don't know the answer. But if you think something is going to come and replace fiat currency and the control mechanisms, the quantitative easing, the kind of the general theft that it allows people to do. They're not just going to give that up easily, are they? And let you have your utopia of a decentralized asset that you control and own. It's kind of like, that's just not the way the world works, is it? I'm afraid.
It's not the way that it's worked thus far, but there are people like Balaji, who you've probably come across, who set out the idea of a networked state
Hmm.
of the future, where we'll all kind of uh, not live in the nation states of the kind that we currently live in, and everything will be all much more fluid, and you'll sort of choose where you want to live virtually. And I mean, there is something to all of this, but
Mm.
like you say, I don't think that the big nations are going to give up their power that easily. Somehow they've existed for thousands of years for a damn good reason, or at least, at the very least, hundreds of years, most of them, and thousands of years in some cases. I don't know. We'll see. But as I say, I consider all possibilities. I'm not ruling anything out, but I consider Bitcoin becoming the global dominant reserve currency of the entire planet to be a possibility, not necessarily a very strong probability. So where does that leave us? Right. Well, after I'd discovered Bitcoin and found it interesting and was trading it and all the rest of it, then Ethereum came along, and that's when the light bulb really went ding above my head, because Ethereum in its early days was known as the world computer. It was suddenly this cryptocurrency that wasn't just a currency, it was a sort of computer operating system. It allowed other apps to be built on top of it, and it did all kinds of clever things, and it was just brilliant, and I was absolutely entranced. And of course, loads and loads of other cryptocurrencies started popping up. Some of them were just copies of Bitcoin, like Litecoin, but there were lots of others that were built in order to take advantage of the new paradigm that Ethereum had made possible. And it's true that up to this point in time, a lot of the promises of cryptocurrency have not come to fruition. But then some rather unexpected things have started to happen. For example, stable coins, which were always just something we talked about sort of on the edge of cryptocurrency almost. Now they are becoming, perhaps the most important current real world application, and governments are taking them deadly seriously. I just read an article in the FT today, for example, that in Venezuela, dollar stable coins are now becoming pretty normal for transactions all over the country, because they can't get their hands on the actual proper dollars very easily, but dollar stable coins are much easier obviously to get hold of, and you can just do virtual transactions very, very easily, as with any crypto, or as with most cryptocurrencies. So, anyway, what I'm saying is cryptocurrencies are a big deal, not necessarily in all the ways that they were hyped earlier on, but they are still a big deal. So getting to trading, because that's what everybody's really interested in. How does the trading work? The way that I outline it in my book is the way that I traded the 2016 to 17 cycle, which you may remember was one of the most exciting ones, that boom there in 2016 to 17. And part of the reason I got a publishing deal, or why they offered me a publishing deal, was because I'd kind of called the top of that cycle. Now, as a trend follower, I don't go, this is definitely the top, because I don't believe that anybody can consistently predict prices. And the reason I believe that is because a ton of studies have been done on this, and the people who are famous for predicting prices, Tom Lee, for example, of Fundstrat, who used to work for JP Morgan. He is very well known for predicting bullishly, always saying this will be higher at the end of the year, this will be higher at the end of the year. I just, the reason I bring him up is because I just happened to be reading something about him yesterday. And so I looked back through his history with the help of AI to sort of dig up old stuff. And sure as eggs is eggs, he is right sometimes and he's wrong a lot of other times. And when I say wrong, I mean really badly wrong. For example, we have it on record that in 2008, he predicted that the market would finish the year way up. And of course, it collapsed. He was working for JP Morgan at the time. Now, that did not destroy his reputation, because, as you well know, people who just say things that are totally wrong in the financial markets somehow just pop up 6 months later saying something else.
Exactly.
Like, how do they do it every time? And he's a perfect example, because not only did he do that with when he was at JP Morgan, he then went out, set out on his own, and in 2017, I was at a conference, and he was at the same. I was speaking at a conference, a crypto one, and he was speaking at the same one, and he was going on about how 2018 was going to be an amazing year for Bitcoin. The price was going to go through the roof, and it collapsed. The price collapsed in 2018 by something like 80%. And yet he is still held up as somebody who needs to be listened to. I just find it astonishing. Can you answer that one? That's my question to you. Why do these people never get their comeuppance?
Well, I mean, that is a rabbit hole we could go down with so many things, from financial experts to politicians. I mean, I'll answer it almost with a question back to you then. There is no, I'll answer this. There's never going to be any justice. Well, there's money involved, mate. There's never any justice, unfortunately. That's just the way the world works. But my kind of question back to you is then, because you've presented the news, obviously researched the news. News is a
Mm,
big thing for you. One thing I've picked up on a change in the last 10 years is this idea there's more narrative than actual news. So it kind of ties in what you're saying. So it's kind of like there's almost like an agenda behind what's said. And it's like, oh, we'll tell these guys anything and they'll buy it regardless. And that could be
mm.
from your experts, whatever. And if the price dumps, oh, well, I was wrong. So what? But there's someone behind the scenes making money. Now, this is what I see and I warn people about with the Trump second administration. He has come on air and said, I can basically say whatever I want and markets move. Well, he's obviously learned from the first time as president. There's money to be made. If you can make markets move, you've got a team of bankers behind you. You can pretty much literally print your own wealth, print your own money. So I guess my question to you, as someone's an expert in news, how do you see that news narrative working? How have you seen the financial news maybe benefit someone that's got experience like you, but then also, as we've talked about just then, hurt retail traders that have no real experience with news? They just trust. They don't interpret. They just trust what they're told.
Well, the great thing about where I stand on all of this is that I feel quite ethical, and that's
Mm.
important to me. I'm not the kind of person who naturally is okay with being the bad guy. I'm maybe it's the way I've been brought up or my nature or whatever. I don't know, but I'm one of life's good guys. I'm no, seriously, I can't bear the idea of like leading people astray, and it
Yeah.
annoys me when other people lead people astray, which is why I hate these price predictors. You cannot consistently predict prices correctly in markets. You cannot. There are a million studies that show that Wall Street analysts get it wrong as often as they get it right. It's practically 50-50, right? So just don't listen to people who predict prices is the advice that I always give retail traders. But also, when it comes to crypto, you can use those narratives that you referred to there, Steve, in order to help you make money. This is what I talk about in the crypto trade. I talk about trading the cycles. That's what I've been doing since 2016-17, as I say. And the narratives feed the cycles, right? And yes, that's unfair because there are people behind the scenes talking all kinds of rubbish in order to try and make prices go up. But us, the people who are on the sidelines buying and selling, we can use that information for our benefit, right? So, the beautiful thing about crypto cycles is they go like this. So it's like up and then all the way down, like 80 to 90%, or with some cryptos, even 99% down or 100% down. A lot of them go bust altogether in between cycles, all the way down. But then higher the next time, and then down another 85, 90% down, up again, and then down. So they've gone so far. I mean, one day that those cycles are going to start doing something different. That day hasn't yet arrived, luckily. And so for all that time, we've had these lovely smooth cycles, which are perfect for trend following. And they are caused, as you say, by these narratives being created behind the scenes and then pushed through social media onto people, trying to get the hype up, trying to get people excited. I watch the hype. I listen to the hype, but I try not to get sucked into the hype, right? So, say there's a hype about a particular cryptocurrency, and I'm like, okay, so they're starting to try and talk about blah, blah. I keep seeing tweets about it. Let's look at the chart. And so I look at the price chart and it's going along sideways for 3 years or whatever, but then I see it's already starting to rise and I'm thinking, okay, so that hype machine is actually starting to push the price up. That's interesting. I might watch it a little bit longer, and then at some point, because as a trend follower, I don't mind not getting a bargain. I don't mind missing the bit at the beginning. I will wait until I think the trend is consistent, not just a quick flash up and down. I want to see a little bit of consistency over, at the bare minimum, weeks, sometimes even months. And then when there's a nice breakout, I will buy it and I will follow the trend all the way up. Now, I mentioned earlier that I called the top in 2017. How did I do that? Well, hype helped me a lot there, the narratives, because it had got to the point where the hype was of such an intensity and the chart had gone parabolic, it had gone vertical for Bitcoin and many other cryptocurrencies. So these were very strong signs to me at that point that it was probably very, very near the top. And then my mother-in-law phoned me up and said, you know how I can buy Bitcoin? And this woman, who I shouldn't have done that voice, but anyway, she's very old, and not just very old, but had never used a computer in her life, didn't know
Yep.
anything about computers, anything, right?
Yep.
But she's phoning me up and asking me about this thing called Bitcoin and how she can buy it. So I thought, okay, this has got crazy now. So I was watching the chart very, very carefully. It got to about $20,000, Bitcoin did. And then it took a massive dive downwards. And then basically, I put a big warning on. I had a Facebook page that had suddenly got quite popular because I was talking about crypto. It had got very popular within like the matter of weeks. It had gone from no followers to 250,000 followers,
Right.
and yeah, it was crazy. And I mean that was another sign, wasn't it, that
Mm.
that the whole thing was going wild. And because of that big dive, I knew from my own experience that, okay, it could just be a momentary correction. So I put warning, in capital letters in my Facebook post. And I said, the lovely kind of smooth movement that we've seen so far, the parabolic move is over now. But that doesn't necessarily mean there isn't a chance that it could go higher again, because it's always possible. But I said, the lovely smooth move is over now. And that was my kind of hint, think about getting out at this point, if you've got any sense.
Yep.
Now, I waited a little bit longer because I wanted to see what would happen on the rebound. So it rebounded, but it didn't get anywhere near the top again the second time. So that was my side. Okay, I've had enough now. It's not got up to the top again. It's not making a new all-time high. I'm going to start selling. So I started selling my Bitcoin, but with the other cryptos, they carried on. Some of them carried on booming a lot longer. Well, a lot longer, a few weeks longer. So I hung on to those, and I just sold each one whenever its own pattern broke down. Whenever the trend bent for each crypto individually. So I didn't just sell them all at once. I sort of had respect for each individual chart and treated it sort of on its own merits. But I did eventually get out of all those cryptos. I think by the end of January 2018, I was out of everything. And then, of course, there was this massive crash. And that's why I got, as I say, partly why I got a publishing deal, because I'd done this big post and I'd timed it pretty nicely. But, I like to think it doesn't take a genius, really, to see that. I mean, it didn't take a genius. I mean, everybody in the all the sort of chin-stroking Financial Times writers have been saying for like a year, "Oh, this is going to come to a sorry end. It's a tulip. It's a tulip bubble. Don't you know?" But it's all very well saying that, but if you can't time it right, then what's the point of you?
Well,
What's the
exactly.
point of your article? And they didn't time it; they just didn't buy it, and then they didn't sell it. But then, because they hadn't bought it, so at the end they're no richer, they're no poorer, and they're just saying, "See, we told you it was a tulip." But you can harness the tulip, and then you can let go of the tulip at the right moment, which is what I did and what I continue to do. I sort of repeated the trick to some degree in 2021 cycle. Once again, I did a warning sort of pretty close to the top or just after it, the first peak. There was a bit of a difference in the 2021 cycle, which is that it then rose again 6 months later to an even greater peak. And that had never happened before in a crypto cycle. And we now know with hindsight that was accounted for by the institutions getting involved. Suddenly
Yep.
the hedge funders were like, "Wait, we got to get back into this." And they bought at precisely the wrong time, which, I mean, you're much more institutional than me background wise, Steve. Do you think it's a bit weird that the hedge funds got in right at the top and then sold right at the bottom? And we know that's true because we've got the on-chain data, of course, which strongly suggests that it was the big institutions, or not the big banks, but medium-sized like hedge funds buying at the top and then selling after they lost like 80% of their money, which seems remarkable to me. But does that not? I don't know. You tell me.
Well, I mean, I don't know. As I say, the crypto space isn't my speciality. I'm on the fringes of it. But when people come out and say the banks got it wrong, the institutions get it wrong, no, they don't. You just don't understand what they're trying to do. So for me, consolidation of all these kind of things, somebody's getting out for some reason doesn't mean that just because it's a
Mm,
loss in the bigger picture of how they're positioned. Money's money, mate. And the big plays are so big now. I mean, so huge. They just don't lose. They can't lose. So yeah, the data's the data, and they sold when they sold. That's absolutely fine. That's undeniable. But in their bigger picture, of their, kind of global positionings, I doubt very much they've actually lost money. So everything has a rhyme and reason, I think. And yeah, this idea that retail got one over on the banks at any point, which we've heard, with the last dip in the
Well,
stock
I
market
think there's
by.
more hedge funds than banks in 2021.
Yeah, I mean, again, as I say, I'm still retail myself. Yes, I know a lot of kind of bigger traders and stuff, but I'm that's not really my expertise. I mean, the end of the day, as I say, kind of who's buying and selling, for what. It's above even my pay grade these days.
Well, I guess
You
there
know,
might have been, from what you're saying, that they have more complex strategies, of course.
yeah.
That suggests that I guess some of them were doing what the name implies. They were hedging. So, some of them, it might appear that all the hedge funds lost loads of money, but of course it might have been part of a bigger game, and some of them might have drawn even, or
Well, exactly. Look at Kathy Wood and all
yeah.
this kind of stuff. It's like and then some of the drawdowns these guys have, but they still stay in business, and they're still there. Like maybe the market's so big, there's not enough exit liquidity for everything, so they've almost
Yeah.
created their own exit liquidity. Maybe that's what most things are now. When you look at the United States, the way I look at it, again, when you talk openly like this, people think you're conspiracy theorists, think you're crazy. But a lot of things and like the kind of way the ETFs have been created, and maybe Bitcoin to some extent is exit liquidity for some stockholders. I mean,
And
it's
actually, yeah, no, I was just going to say there was a massive Bitcoin sell the other day, which
just the other
caused a
day,
big
yeah,
spike down in the price, and
yeah,
everybody was talking about it. All the big Bitcoin sell because it was just one big
big chunk, 21,000
bloody
or something, yeah.
huge thing. Yeah, yeah. So the thing about it is that everybody, is suggesting, oh, it's those sneaking like MMs. They're up to their
Mm.
old tricks again. And all that kind of thing. And yeah, well, I mean, it's possible that it was just a manipulative strategy aimed at temporarily pushing down the price in order that they could make money, or it was exit liquidity, like you're talking about. Maybe some big player is just like, well, I've run up
Cashing my
the
chips in, mate.
Bitcoin.
I'm out. I'm off to
It's
Marbella.
gone up a hell of a lot. It's like, I've made loads of money, and now it's time. The Bitcoin cycle looks like it might be getting towards its end. It's a bit long in the tooth. They might have been thinking that. And so that's a perfectly, that has to figure into my thoughts now. As you can tell, it's in my mind now. I'm thinking, so I'll be looking out more carefully now for whether there are other signs of exit liquidity. And actually, there is one beautiful big sign that we can look out for now in crypto, which we didn't have in the previous cycle or any of the previous cycles, which is the ETFs. And if you look at the data for flows in and out of the ETFs, and that's available on all kinds of different sites, I won't name any of them because they're not paying me. But I don't
Fair
get paid
enough,
by
mate.
any. I never asked for. I need to do some deal. I haven't got any deals with anybody. I need to get some. Everybody in this sector is always like, I've got my deals with different sites,
Yes,
and I
stick your
never
hat
heard.
on, the watch on, the t-shirt.
I'm terrible. I just like every time I am offered anything, I turn it down because I'm worried it will affect my integrity or something. This is the ethics I was talking about earlier,
Yeah,
but
sure, I get you.
sometimes it makes me feel a bit stupid because everybody else is getting all the ad bucks and I'm not. But anyway, that's something to discuss another day. So anyway, yeah, like I say, there are lots of different websites where you can look at the flows into and out of the crypto ETFs, particularly the Bitcoin ETF and the Ethereum ETF, Ethereum ETFs and Bitcoin ETFs, rather. There are several of each. There are also now some sites that will show you even the Solana ETF and sort of a few more minor cryptocurrencies. But as for Bitcoin in particular and Ethereum, being the two main ones, what I've noticed is that there is a very strong correlation, like a really strong correlation between flows in and out of the ETFs and the movement of the price, right? It's just like, we all see correlations between this and that, but I mean, this is one of those almost rock solid correlations on a daily basis. If you get flows into the ETF, you're almost certain to have the price move up that day or the next day. So every day, if you see an inflow into the Bitcoin ETF, it's very, very likely that the price of Bitcoin is rising that same day or perhaps the next day. And likewise, when you see flows out of the ETFs, usually the price is falling as well. Now, as I say, this is a very strong correlation. It's not 100% solid, but it's very, very strong. And what's particularly interesting to me about this is that inflows into the ETFs are what I'd call sticky money, right? Because a lot of it is coming from big institutions. And when the big institutions invest in Bitcoin, they're sort of fairly ambivalent to the price. You know, they've just made a decision. I'm getting into Bitcoin. They're not going, oh, I must get in at blah, blah price, right? And likewise, once they're in, they don't tend to get out again because that's, you know, that's how institutional traders or investors, rather, you know, fund managers and that kind of thing, that's how they operate. They want to make it in their investment. They want to put an allocation of the portfolio into Bitcoin, and then preferably they kind of want it to stay there. So a lot of them, I mean, some of them are traders, obviously, but a lot of them are more reluctant to pull out their money. So what I'm waiting for this time, and I'm hoping this will be a good exit signal, is not just the price of Bitcoin reaching a peak and then starting to decline, which will, of course, be my main trend following signal, as it always is. And you look at volume as well. That's a sort of secondary signal for a trend follower. But now we have kind of this third one, which is the ETF inflows and outflows. If I start to see several days in a row of outflows, I don't think 1 or 2 days makes much difference. That doesn't necessarily mean we're at the top and we've passed the top. But if I start to see sort of consistent outflows from the Bitcoin ETF or the Ethereum ETF or both over a period of days or even weeks, then I'm going to be really, really worrying at that point. Because as I say, a lot of this money is sticky money that has supposedly gone in for the long term into these ETFs. So if we're seeing outflows or net outflows, I'm talking about, because obviously you want to, if you're seeing more money coming out than you are going in on any particular day, then that's an outflow. If we're seeing this over many days, then that to me would be a very worrying sign, don't you think?
Yeah, for sure.
All right, good. We've got our trading plan then. That's it.
Yeah, that's it. Well, we're off. I mean, like all these things, Glenn, I mean, it's kind of, the interview starts going and then, you feel like you could talk for hours, because the more you go into this with people that kind of understand the space, the more kind of questions you ask yourself. And that's what's difficult about trading, I guess. It's never any answers. It's just the click of the button. And you're then in charge. It's your rules take over. So I mean, we could talk all day, I'm sure, but we're going to have to call time on this interview, I'm afraid. Obviously, the Crypto Trader, very successful. Second edition's out. If people want to get hold of you, is there a good way? I know you're pretty handy on X.
Yeah,
Twitter,
I
as
like
still call it.
I've got a kind of small but cozy community there, which I kind of like because. I mean, Peter Brandt, for example, because he's got something like 800,000 followers or something on X, he gets very upset with all the trolls. It really bothers him because he gets so many, just, whenever he posts anything, it's just troll city. But obviously there are really decent people out there listening to him and learning from him. But it's hard for him to see that because of the blizzard of information. So I've got a much smaller community, and everybody's nice to me. So I like it there. So yes, at Glen Goodman on X, and also my website, glengoodman.com. It's got a bit of information about me in the book. Book's available all the usual places in pretty much all over the world, I think. So,
excellent, mate. Well, we'll definitely everyone should look out for that book. And yeah, it's been great talking to you guys. It's been very insightful. So thanks very much. And as always, to our listeners, if you like, please comment that you liked. Subscribe, and we'll have plenty more interviews coming up. But for today, we're going to call it a day and a wrap. So
thanks very much, Steve. I've got to get that in. Thanks, Steve.
Yeah.
Great questions.
Oh, my pleasure. My pleasure, mate. My pleasure. No, likewise for me, Glenn. Thanks very much. Take it easy.